Hey guys, welcome back to Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. If you are new here, I do several things, including a Robinhood challenge where I do $5 a day. And I show you guys a lot of charts, how to find wonderful stocks, stocks that are strong, all the way to showing you how hedge funds and institutions are buying, when they're selling, etc., and so much more. So if it's your first time here, welcome. Today's video is going to be about investing in the facts and not the dream. And this is a wonderful time for not only you, but myself to get educated on the history of stocks in the stock market that, there was mass euphoria. Everybody wanted to own it when the company had no sales, no products, no services, and at the end of the day, down the road, the stock collapses, CEO gets sentenced to prison or jail time due to fraud. Maybe the company just fizzles out completely. Maybe it was just a pipe dream. So we see a lot of this in the stock market. Um, and we need to do proper due diligence. And so there's a few different ways we can look at this. We can look at this as, okay, imagine you yourself you're a hedge fund by yourself for yourself. Someone comes up to you with, they're presenting to you Uber back in 2002. I don't know. So you get that presentation, you get their data. Maybe they have some pilot program where they're already collecting metrics, etc. Um, Part of that regulation, and think of Airbnb as well. Part of that regulation and due diligence of your research should include, okay, if you are a company that uses other people's products, what are the regulations? What are the laws, the rules, etc.? What kind of impact are you seeing in your pilot programs, etc.? Um, and those are two anomalies. Those are two examples that did really well. Other examples that did not do so well, I'm talking your Nikolas, your Pelotons, your Rivians, your Teledocs. So we'll look more into that and we'll look at the charts and we'll look at facts. The whole purpose of this video is always looking at the facts. Don't look at the dream. If that's the entrepreneurial spirit is a dream, but how comfortable can you feel? I feel like you should feel confident to a certain extent. A lot of startups are asking for cash, they're asking for capital. And part of your research, your homework is you need to look at their modeling. You need to look and see what they're projecting, look at similar industries, look at similar businesses, really comb through that data. Um, Saying this also goes for, let's say you're a big YouTuber and you get a sponsor request from FTX or some cryptocurrency company or coin. You need to do your research. If it sounds too good to be true, it has to be. So hindsight is 2020. But let me show you how you can better prepare yourself in the stock market when you see the market going freaking nuts. Before you hit that buy button, let's just follow my method here, and we'll get through this very smoothly. We're gonna look at facts. We're not gonna buy based off of what could happen in 5 years, 10 years, etc. So without further ado, let's just jump into a few charts. All right, so the first example we have is Nikola. Do you remember when literally every day on CNBC, they were talking about Nikola. Nikola went from $9 to almost $100. There was so much hype. Hydrogen cars, the future of renewable transportation. Hydrogen is better than solar. Hydrogen is better than electricity. Hydrogen is better than gas. You got this awesome video with Trevor Milton saying, this semi truck is running on hydrogen. Cool. Let's say that's all true. Okay, so what are the sales? What is the debt? How much is it costing you to make all of this? So if you go to Finviz, do it on a laptop, do it on desktop, don't do it on your mobile phone. This is the website that will change your life if you continue to pursue it. So my big head is fine here because I don't really need to go too far. So Nikola makes $50 million a year. Cool. But they're spending $784 million to make that. That is atrocious, and that is a huge red flag. Let's look at their debt. So you can, if you scroll all the way down and go to their balance sheet, and you go to the total debt portion, which is right here, you can see they don't have that much debt, 354 million in debt, but still that's like 6.5 times more than what they make. So good luck. Um, just not, this is not sustainable. They're gonna be out of business soon, and I don't know what they have going in their pipeline, but if you would have looked at their sales, you would have seen they're not making a dime. Everything is based off of dreams. Don't buy the facade, don't buy what's in the future, buy what's in the now. And a lot of people don't really think about this, but when stocks, really good stocks, like when you have sales here that are amazing and income here that is amazing and the stock is going down, that is a sale on a potentially good stock. Do your own research. Got to look at the debt. Got to look at the earnings per share growth last 5 years, this year and next year. You got to look at the gross margin. You got to look at the share slope. You got to look at a lot of things. You got to see if institutions are buying, insiders are buying. So do your own research. But when good stocks go down, you want to buy more. When bad stocks like Nikola go down, you want to stay away because they're still not making any money. Oof, okay. Um, so Nikola was one of them. The next one was the good old Peleton. Peleton, it looks like, gosh, did it delist? Oh, I went to the wrong stock. Peloton. Oh, Piton. Duh. Okay, let's look at Peloton. Oh. So this actually looks like the psychology of the stock market chart. Let me just pull that up on the fly. I'm just pulling this up on the fly, everybody. Images. This kind of, and I'll get a bigger one and I'll move my head. Look at this. This looks like the Peloton market cycle. So again, started from the bottom up there. Now we're here. So we had euphoria, and now it looks like we are in the anger stage going to depression. But let's calculate, let's see what the fair price of the stock is. I haven't actually looked at this one. And again, it looks almost just like this psychology of the stock market. So I think we were right here, and now we're going to go to depression. Is the stock worth less than $9? Let's find out. Okay, so they make 3 billion in sales. 3050000, and they lose 2.756 billion, 300,000. So they make $293 million a year. They're slowly paying off their debt. So we're not even looking at their debt. Like if their debt is over 293 million, they've got a long way to go. Their debt is at 1.5 billion. So yeah, good luck paying that off. That's unfortunate. But just looking at this, let's pretend that they have no debt just for fun. And let's divide it by the 310 million. I have to do it longhand actually. 310, 65 million. Yep. Almost $1 stock. But I also did not include the market cap, which is basically 3.21 billion divided by 100 million gives us an extra plus 3.21. So it's about a $4 stock based on today's value. Not even looking at the debt. The debt is disgusting. So again, this is going to be between $4 and $1 eventually. And yeah, this candle right here is very bearish. So we're going to depression with this. They need to pay off their debt. Maybe they'll be a lot better in like 2027. We'll see. But yeah, the stock is ugly. People just dove into this stock. You know, it's one of the you never, even for myself, if I mention a stock or if anybody mentions a stock, it's already usually too late. That's why I like to show you guys how you can do this on your own, how to do scans for your own stocks, what to look for, how to scan for low flow, small cap stocks with no debt, insiders owning a lot of shares, how to look for stocks with good dividend yields that can move like small cap stocks, etc. Because if I'm saying I'm into a stock, it's never intended for you to buy. I want you to just see my journey and how I've got to seven figures before and how I'm planning on getting there again. And I want you to use the same steps. You know, look at scanners, tweak scanners to your comfortability, track stocks, etc. So Peloton was another meme stock one. And let's look at Rivian now. So Rivian is it's I don't want to say it's got a place in my heart or anything, but it was one of those stocks that was very, very popular, well, well heard in the media. You know, it's going to be Tesla number two. It's going to replace Tesla, etc. But again, just look at how much they're making and how much they're losing. This is tough to look at. Sales are 1.6 billion, but they're losing 6.75 billion. So the caveat there is, let me just call some things out. Back when this was $180, they had nothing going on. And now they're starting to roll out cars. So let's just, I mean, a company that makes 1.6 billion but loses 6.75 billion, that's not a good company. But they're paying off their debt. If we look down here, you can see their debt is zero and their long-term debt is just a little bit. So now that they've got that under control, I think they're going to be a good player in the uh, electric vehicle space. Institutions are adding right here, we can see. Let's just, I mean, I can't even do the math to figure out the stock, but let's just see how aggressive they are in paying off their debt. Oof, their net income is just getting, it's bad. So, total debt, it went from 1.226 billion to 1.231 billion. So, it's not looking too hot. We are going to stay away from this one still. Um, you're buying a pipe dream here. You should stay far away. Again, this was all a dream. There were no facts. If you would have seen Rivian and you would have been like, "Oh my God, I really want to buy Rivian." Just again, or any stock in the future, just come down here, finviz.com, type in the ticker symbol, look at the sales, look at the income. If the income is negative and greater than the sales, this company makes no sense to invest in. It's just a money pit. Like, imagine if I, as a human being, made 1.6 billion dollars, but I spend 6.75 billion. I'm I'm screwed. So just think about those kind of things. The next one is Teledoc, and this one's great as a great example because Teledoc became extremely popular when the Great Lockdown occurred. You know, seeing your doctors through your phone, your computer, etc. Um, where do you think this is in the psychology of the stock market? We had the euphoric high, a little bump up, come up. We've had a fake rally here. Has there been a fake rally yet? There hasn't been a fake rally yet. Let's see what this stock is worth. Oh my God, they make 2.4 billion, but they lose 13 billion. This is not profitable. Why is Kathy Wood buying this? I have no idea. How much cash do they have? It says they have a bunch of cash. 918 million in cash, almost a billion. God, that's horrible. How much debt do they have? Total debt 1.5 billion, up from 1.2 billion. This is disgusting. Total assets 4.3 billion, total liabilities 2 billion. Um, no. We're staying away from this stock as well. Again, if a company makes 2.4 billion in sales but they lose 13 billion, disgusting. Never ever touch a stock that has a large negative number that exceeds the sales. Okay. So that's number one that I wanted to cover was just, look at the sales, look at the income. Does it make sense? These did not make sense. These were all dreams that was being portrayed on CNBC, Wall Street Bets, Stock Twits, Yahoo Finance, Stockhouse, whatever your forum is. It's, if you're seeing a stock on the headlines or on the internet, it's probably too late. Instead, learn how to find these before they move. And there is a strategy to find ones like these as well that aren't great on paper, but also the technicals, the chart is the move. So keep that in mind. That's for more experienced, advanced people. But we like to couple fundamentals with technicals. If you have a great pairing there, you can get a freaking monsoon, a monster tsunami move like Digital Turbine, AMD, Enphase, Renasola, all of those, you know. So yes. So part two I want to show you is how you can educate yourself, and I can educate myself. It's always great to look at this. Where we're at in terms of periods in the USA of when we have wars, when we have panics, when we have boom times, and when we have times to buy stocks. Let's dive into that one. All right, so we are looking at the periods of when to make money by George Tritch, created in 1872. Samuel Benner, also known as the Benner cycle, used this same chart without giving credit to George Tritch in 1875. George Tritch then did a copyright of this in 1883 and also 1897. I do believe George Tritch was the first to create this, and Samuel Benner is mostly referenced when it comes to this because Samuel Benner also created a book basically detailing this cycle, although George Tritch did create this on his hardware business card when he immigrated from Germany to Denver, Colorado. So now that we got that out of the way, this is periods of when to make money. There's panics, there's periods of panics, there's periods of good times and high prices, and years of hard times, low prices. So let me just zoom in to show you exactly what I'm talking about. So period A is years in which panics have occurred and will occur again. Period B is years of good times, high prices, and the time to sell stocks and values of all kinds. And C, years of hard times, low prices, and a good time to buy stocks and corner lots. I think that's real estate, goods, etc. And hold till the boom reaches the years of good times, which is period B. So I have a very good detailed video that goes over all of the years of panic. What were the causes of the panic? We have the Revolutionary War, everything. I go over all that. So check it out. I'll link it up above. But let's currently look at most recent times right here. So let's look at the Great Financial Crisis. That was from 2008 to 2012. So a lot of people criticize this chart for missing that. However, I do want to say yes, that was a horrible time. But I also do want to note, I believe the 1% and those people who saw this coming, I don't Michael Burry, but all the other economists. Um, there is also Ivy. Oh my God, I forget. Forgetting her name. Ivy something. Gosh, I have to look it up. Crap, I forgot her name. Anyway, there's another lady who also saw this coming. I feel like a lot of people with big money, big pockets saw this coming, um, and did not get affected. So I think maybe I'm trying to defend a chart that was made in 1872. But in support of saying the Great Financial Crisis and real estate was included, 2007 was the boom time and it went back down to the years of hard times to 2012. 2008, 2009, 2010, 2011, all the way heading towards the low price time. Just calling that out. But I also do want to call out 2023 is right here. This is the time to buy stocks and corner lots, real estate. Mm, we'll see where the rates go. And then in 2026 is going to be a year of boom times to sell stocks. And my head's in the way. So 2026 right here. And then 2032 is going to be another period of downtime. We'll see what happens. You know what? I just want to put this out there. Based on where we're currently going with rates, we're seeing the 2-1 buy down, which I think is going to be part of the next crisis, where people are buying, they get, so basically, let's say I buy a $300,000 house at 7% interest rate. So for the first year, I get 5% interest rate. Second year, I get a 6% interest rate. And then after that expires, I get the current interest rate and I could be screwed. We could be losing jobs still, and I'm going to be forced to pay the current interest rate, which at this pace is not looking good. And that's 2026. So this is all brewing right now, 2023. By the time 2026 rolls around, we're going to have those 2-1 buy downs into effect. And people might not be in a good spot depending on where rates are. Could you imagine if I was paying my mortgage rate and then I had to pay a 10% mortgage rate going from 5? I wouldn't be able to. So I think that's where we're going to see a lot of people. Um, that's future looking, but we'll see what happens. The Fed has been very cognizant of how sensitive the people are to the rates. So we'll see what happens. But also just to further kind of go back to our Genesis, not the Genesis, what am I talking about? The summary of our whole video. Things got super crazy leading up to this euphoric panic right here. And right here, my head's in the way, dang it. So right here, we have the dot-com bubble. Whoops. Dot-com bubble, dot-com bubble right here. Prices skyrocketed and then just pop. Then 2019, the great lockdown occurred. Pop. Affected businesses, affected a lot of, not it affect I think it affected more people than I think the great financial crisis, because small business had to close down, people had to quit their jobs to stay at home, watch their kids. Businesses closed, people got laid off, etc. A lot people perished due to the sickness, so just not good at all. So I think this does encapsulate the Great Lockdown, which did occur in 2020. So it was just barely off, but we can see this has held true. And again, I'll probably link the video twice during this period, so you can go and watch it. This is my most popular video to date. Um, but yeah, that's all I have for you guys. Thank you so much. If you've made it this far, please consider hitting the subscribe button and the like button. It does tell YouTube that I am doing something. Um, but yeah, I appreciate you guys. I hope you're doing well. Take care. Have a great day or night.